Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is a Freight Coach Morning Show, the top morning show in transportation, coming to you live every single weekday. I almost forgot my intro. Every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines and, most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before everything I do. And what I mean by that is I only speak to transportation professionals on this show because I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take it, apply it, utilize it, and see a meaningful difference in your business and your life. Corey Buchan, happy Monday. He's coming in over on YouTube, ladies and gentlemen. I go live on YouTube as well, you guys. It's just, if you want to go over there, it's the Freight Coach. The stream is exponentially better on YouTube than it is on any other platform that's out there. So I'm really trying to push people over there because the viewing quality is substantially better than over on LinkedIn. And people actually get notified when I go live on YouTube as opposed to LinkedIn. So check that out, you guys. Yeah, let's get going here. Let's get into some things. There's obviously a lot of news that came out as of yesterday. But I am glad to be back in studio here, and I am definitely glad. I'm not happy to be home because I had a fucking phenomenal time this past weekend. I was out in St. Louis, Missouri, and I was out there. So if you guys listen to the show often, you guys know I am a massive, massive fan of Andy Frisella and Ed Milet, and I am involved in their entrepreneur group called the Arate Syndicate, and they did a live summit out in St. Louis last week, and it was, I've been following Andy and Ed since I started my company back in 2020, and all the stuff that they talk about, and especially I'm going to use Andy as the example because it was at the First Forum headquarters and everything. And all of his stories about what he talks about on his stuff and persevering and going through those things. And when you get to actually walk the halls of his facilities and what he's built over his career, it just makes it so much more real. And, all of the people that I met out there, everybody out there was a high performing individual. Every single person that was at that event, it was there to get better. It was people from all walks of business were there, and everybody was so gracious to help out with any questions that you might have had, and everybody was there to win, most importantly. And that, to me, was what stood out to me the most, is everybody wanted to win. There was no fucking loser talk out there about anything. Yeah, everybody deals with challenges, but nobody was there to talk about that they weren't going to figure it out. Everybody was there to make it happen. And I just, to me, that's what you need to be around. You need to be around those individuals who support your dreams and support the areas of life that you want to go after, and fucking eliminate everybody who doesn't align with you, who is not pushing you to be better as a human being. So yeah, I will say that. I don't want to go into it too much because, I will say this though, if you're an entrepreneur out there, the Arate Syndicate is literally the only group you need to be involved in. That is the best entrepreneur group that is out there by far. But yeah, let's hold on, you guys. I got a rate quote coming through here, ladies and gentlemen. As you know, you guys watch the show because your boy actually moves freight. I don't theorize about shit. I'm actually out here making things happen. So give me just one moment here and I will get this customer quoted, because that's the speed. Speed matters in this game, everybody. Righty here. What do we got? Come on, internet. All right. This one is in Arizona. It's an Arizona to Arizona rate. So I am taking in some pricing considerations here, you guys. And that's one thing too. If you guys are going to be out there quoting loads, can these loads deliver straight through? What are some additional questions that you can get on that to try and make it a more appealing shipment? So that is one thing that I always take into consideration when I am quoting out my customers. So if you're quoting out customers today, and it's a shorter miles, because this one's a shorter mile run, being able to deliver it same day is crucial, and it actually saves your customer money if the drivers can do that. So take that into consideration as you're bidding out your guys' freight. And I am going to get my customer rate here right now. What are the additional parameters that can make this a more appealing load for your customers? All right, give me just 1 second here, you guys. Alrighty, is alrighty. Alrighty. All right, cool. Let's get into it, you guys. As always, you guys, I know that there was a little bit of gap there. So if you jumped off the stream, I completely understand. But yeah, let me see. Tracy St. Clair, good morning to you. Sorry, guys. I was just bidding on freight. Anyways, you guys, some news that broke this weekend. It was yesterday. I think my phone melted when the news broke about UPS is selling Coyote Logistics to RXO. And it's wild how many fucking M&A experts are out there right now all over social media talking about this. Does this do anything to my business in particular? Absolutely not. This doesn't change anything. This doesn't change my mindset. This changes nothing about how I am approaching business development out there. Acquisitions happen all the time. And I know that everybody's got a theory going on out here. But if you guys actually read Brad Jacobs's book, How to Make a Few $1 billion, which I did, I just finished it up last month. If you actually read his book, which everybody posted that they read it, so I'm shocked at how many people are surprised that a move like this went down. Brad Jacobs is a fucking G. All right. That's all you need to know about this entire situation. Brad Jacobs is a fucking G. All right. He explains everything in the book to me. This is how I perceived it. When he authored his book, How to Make a Few $1 billion, he laid out in there exactly how he does things. All right. So nobody should be surprised by this at all. It makes perfect sense to a guy like Brad Jacobs who makes $1 billion moves, not $1,000 or $100 moves. Okay. So how does this benefit them? I don't know. He fucking knows, and that's all that matters. And that's somebody who I would follow a lot. Okay. Follow the way that he thinks and operates and why he made that decision. Okay. The article that broke it down is on ttnews.com. RXO thinks that it's going to enhance their market position, diversify its customer base, and broaden its carrier network. And then the company plans to fund the acquisition with a mix of equity and debt, with the purchase price being set for $1.025 billion. And UPS is losing about $800 million on the list here, or excuse me, on the acquisition, because they paid $1.8 billion for it. Let me see here. And as UPS positions itself to become a premium small package provider and logistics partner in the world, it decided to sell its business, said Carol Tomei, who is the CEO. RXO board unanimously approved it. And then RXO's highly accredited, RXO's acquisition of Coyote will immediately increase the scale of our brokerage business, providing customers with the capacity across a wider array of power lanes, said Drew Wilkerson, of the CEO of RXO, and that it will realize significant synergies from the acquisition by quickly integrating Coyote's business into RXO. Coyote generated $33.2 billion in revenue last year. It also reached approximately $470 million in gross margin and $86 million of adjusted earnings before interest, taxes, depreciation, and amortization, which is also EBITDA. Let me see here. The deal is expected to make RXO the third largest broker that is out there, said TD Cowen analyst Jason Siddell. The deal is expected to close in late 2024, and RXO's management expects immediate EBITDA and adjusted EPS synergies, excuse me. Susquehanna International Group analyst Bascom Majors included his initial thoughts on the deal. Our RXO forecast remains standalone only, but we're adding $2 to our target price today for a very preliminary look at this into 2025. Major said. Broken down, our target price is of $14 is based on an unchanged 24 times price to earnings on our reduced standalone 2025 EPS of 50 cents plus $2 in value for potential for the Coyote acquisition out there. I think this is a fucking great move. I really do. And mark my words, I wouldn't be surprised. All right. Because again, this article was from TT News, you guys. I think it has a great breakdown of it out there. ttnews.com, UPS to sell Coyote to RXO. Mark my words, you guys. It is June 24th of 2024. RXO will buy another major player within the next 12 months. I would say it might be a little bit more than that. So give me a little bit of grace. But RXO is not done buying. All right. They are not done buying. I would be, honestly, that's just a gut. I have nobody. I don't even know fucking anybody at RXO. This is just a bold prediction because Brad Jacobs is a fucking G and he is the chairman of the board out there. So yeah, Drew Wilkerson's the CEO, but Brad Jacobs and his team are calling the shots. They're not done. I guarantee it. I guarantee they're not done. It's going to happen. I bet you they're the biggest buyer out there over the next 12 months. I bet you they go after a bunch more people. Hell, they're probably already doing it. So yeah, pay attention to that, you guys. Again, like I've been saying, I think the exodus in this industry comes on the brokerage side of things over the fleet side of things, especially at this point in the market. I think that brokers are going to be the ones that will be suffering the most from a market share perspective. And a deal like this doesn't affect your book of business like at all. Okay. Like I truly don't, unless you are in direct competition with CH Rob or with RXO, like a CH Robinson and TQL and stuff like that. But the overwhelming majority of us, the 95%, this literally changes nothing. This should change nothing with your sales approach. This should change nothing with anything. Hell, if anything, if you're a business and you can afford to bring on, you guys are probably going to be able to bring on some very top tier talent here coming up, because I wouldn't be surprised if there's a bunch of people who are available after this announcement or going to be available that are going to be some pretty solid players out there. So I think that the industry benefits from something like this. I don't think this affects anybody nearly as much as they think it does at all. But yeah, fire up that phone today, ladies and gentlemen. Get out there. All right, let's go. Next article we are going to break down is also from ttnews.com. And this is Fleets persevere through down market with care and creativity. ttnews.com, if I didn't say this. An overabundance of freight hauling capacity, weak rates, and higher operating costs are all contributing to a challenging market for trucking companies. I can't ask customers for more pennies right now. If I can find ways to save pennies, it is the same thing, said Royal Jones, CEO of truckload carrier Mesilla Valley Transportation. Every penny a mile is $150,000 a month. From the surge in freight demand during the economic rebound during the pandemic, trucking hasn't had a normal freight market for the better part of 4 years, said Dean Croak of DAT. Conditions today feel similar to late 2018 and 2019 with a prolonged period of low demands. Shippers still have pricing power. They're still driving down contracts because there is still capacity in the market. Spot rates, meanwhile, are nearly identical to where they are in 2019. We're seeing soft demand for manufacturing, food, chemicals, and steel, even through housing. Even though housing starts were up, there's still not enough demand to move the rate needle. There is a lack of confidence because we don't know when the market will turn. That all supports a very soft freight market that is still oversupplied with capacity. I have a really good idea on why it's still oversupplied with capacity, because I've heard this. I'm not going to mention any names at this time, but I have heard this from multiple people at this point. And it's not like it was random DMs that came in my way. This is from people that I know, that the reason why that there are so many trucks on the road still, is that there's a lot of people out there who stop making payments on their equipment, and the banks aren't repossessing them at all. So they can run for nothing. And that's why that. So this is all the theory. I want to be very, very clear about this. This is all a theory. Nobody has any proof. This is all speculation, but this is speculation from people that I know and trust. So they don't benefit from this. It's actually hurting their business substantially on why, but they've heard this from multiple people. I've now heard this from multiple people that the reason why capacity is still on the road at the levels that it is because banks are not repossessing trucks or trailers. So people are essentially able to run for whatever they want, which will be wild. I've reached out to some people that I know in the finance world, but I can't find anybody to publicly comment on it. But it makes a lot of sense. All right. It makes a lot of sense because, like for me, it's if you look at consumer credit card debt being as high as where it is and where Americans' savings are as low as where they are, it makes sense, right? It makes sense. Again, it's all speculation, but I think that might be a very driving fact. And then on top of that, more and more people are agreeing to do it for less and less and less and less, and they're willing to lose money. So yeah, it's interesting, right? That's just a complete theory out there, but I haven't talked about it up until right now because but I've heard it from multiple people where I feel comfortable saying it now. Like I don't see where any of these guys benefit from telling me this if it wasn't true or some truth to it. But on the supply side, the general headline is as we still have more trucks than loads out there, adding that carriers made unprecedented profits during that time. However, there have been several notable bankruptcies out there. Lindsey Burr, a senior economic analyst at the American Trucking Association, said there was almost a 7% increase in the number of carriers leaving the industry from December of 22 to December of 2023, but the rate is slower than in previous downturns. It has happened, but it's prolonged, and it will probably take the rest of 2024 that was out there. Part of the reason capacity is leaving slowly has to do with the banks that own the liens on equipment and their reluctance to repossess that equipment. Holy shit, I didn't read this article prior, you guys, but that is in. Okay, so it's fucking public, all right? Banks are reluctant to repossess equipment. That is keeping rates where they are because there are people out there who are willing to fucking run for whatever because they don't owe any money, all right? It significantly changes their pricing decision when they're like, fuck it, I'm not going to pay my truck or my trailer. And then speaking of that, like, how is there not? Okay, so it literally says this in this article. This isn't just me making this up. TTnews.com wrote this article, and this is that fleets persevere through down market with care and creativity. If their care and creativity is don't pay their fucking bills, yeah, that's a great business strategy. Because it literally says in here, and I'm going to share my screen so you guys, because just in case you guys don't want to go look at this article, I'm going to share my fucking screen and show you this right now. All right, perfect. Right here. Part of the reason capacity is leaving slowly has to do with banks that own the liens on equipment and their reluctance to repossess that equipment. During the recovery, buyers paid a premium for Class 8 tractors at that time. That equipment factor is also contributing to those carriers' willingness to take whatever loads they can get. They have to run hard at lower rates to pay their financial insurance, Croak said. If Class 8 truck prices go up, ATA's Burr said she expects to see significant number. That's like right there. They're saying the reason why rates are the way that they are. All right. So for all of you responsible business owners out there that pay your fucking bills every month, why rates are where they are? Because if they're willing to talk about this publicly, that means that this is probably a fucking major problem out there, that people are not paying their bills. Okay. They're not paying their bills. That's why they're able to keep rates as long as it is. And it's fucking over all the responsible business owners that are out there. And yeah. So ding, 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 you guys, there's the silver bullet. Why the market is staying where it has for as long as it has is because banks aren't repossessing equipment. Therefore, people are still driving and they're not paying their bills. All right. I'm not even going to read anything else in this article because there's nothing else to talk about after it had said that. All right. So I just think of it like this. That's what you're competing against right now. All right. You're competing against a bunch of trucks that are on the road that don't have to pay their bills. But the thing is, if eventually they're probably going to stop paying their insurance, because if you're willing to do that and then not pay your obligations of debt, it's only a matter of time before your shit's going to get repossessed because they're not going to be able to pay their insurance or, because essentially what it probably is, my gut is telling me it's at this point, it's just a cash grab. They know the ship's on fire and it's a sinking ship. So they're going to get as much as they possibly can. And then they're just going to fucking park their truck, show it up just drop it off at the bank and say, fuck you, take it. That's just where my gut's at on it. So if you can sustain this, ladies and gentlemen, the ones who are doing it the right way, I think you will be rewarded in the long term because you can't operate like that. You can't fuck people over knowingly and then make it in the long term. It's just unfortunate that there's shit like that like this that's going on. But there's always something. But again, how does that affect your business? How does that improve? How can you you need to be focused on your business. I can't control what other people do out there, right? Like I can't control what other people do and say in the market. I can't control a lot of things out there, but I can control my actions, my communication, my product, my services, everything else that's out there. So no matter what, you guys, there's an opportunity. Okay. Keep that in mind. There's an opportunity that's out there. The third article that we are going to break down is from the JOC. JOC.com. U.S. imports accelerate, but inland transport lags, says CSCMP. Citing global and domestic concerns, U.S. importers are pulling orders forward to bring containerized freight into the U.S. as early as possible, as an international logistics executive said during a press briefing in D.C. They want to get things moving right now, said Ron Marotta, vice president of International Division of Use and Logistics. The situation in the Red Sea is getting worse every day. We have worries about crewing ships, and we have concerns about labor at East Coast and Gulf Coast ports. I don't think the rest of the year will be without challenges. U.S. laden imports from Asia rose 6.7% in May. And while Houston and other international logistics providers are definitely seeing an increase in ocean freight, surface transportation modes mostly are still waiting for those imports to trickle down. And we expect slow growth until new economic engines are identified, said Josh Brogan, a partner at research firm Kearney. Something needs to change. He said it's not clear what that something might be. However, I expect it will be interest rates related, said Andy Moses, a senior vice president of sales at Penske Logistics. We're seeing signs that the truck rates are firming up in a bit of the interaction with these shippers. If volume increases, they will firm up more. And then no going back. It said early signs of firming include increased spot market truckload volumes in May and higher truck tonnages that were out there. Some pulled forward before imports before making their thing inland. I just want to quote out that spot markets rose in May due to DOT inspection week and the Memorial Day holiday. All right. People fucking declined spot market or contracted loads. They went out into the spot market. That is the biggest telling sign that is out there. And then anytime there's seasonality of freight, like produce season, obviously tender rejections are going to rise because why would I take your load for $2 a mile when the fucking spot market is paying $2.40 a mile? All right. That's just how people operate. And then it goes on to say, if U.S. freight demand is to rise more sharply, I think it comes down to interest rates coming down. And the shorter, the sweeter. It says retailer Bath and Body Works has a largely domestic supply chain, but launches about 7,000 products a year. We need to continually evaluate our supply chain discipline, said Brad Mager, vice president of supply chain over there. We have discipline and rigor in our forecasting processes, but we can't guarantee we'll always get it right. Having a shorter, faster supply chain helps the retailer continually reforecast. Shorter and more reliable supply chains can remove a lot of challenges. This is another good article here, but again, what he's talking about is I think that a lot of people are going to continuously rework the way that their supply chain operates. And again, I think that the nearshoring is going to continue out there. And yeah, you can make the argument that essentially China is buying up Mexico now to avoid tariffs and everything else. But again, a shorter supply chain is always going to be more beneficial to the end user. And I think that a lot of customers and large retailers will continue that reinvestment. But that will be it for today, ladies and gentlemen. I got a guest coming on tomorrow. We're going to be talking about tech in the industry. We're going to call it Tech Tuesday or some shit like that to help bring the industry a better understanding about what some buzzwords and keywords are out there. But as always, you guys, if you guys got value in what you heard, subscribe to the show. We got a newsletter we release every single Wednesday. Go to thefreightcoach.com if you want to register for that out there. But as always, you guys, I appreciate you guys. I love you guys, and we'll be talking to you soon.